All right, good morning. Welcome back here to Trader Money. Great to have you aboard. Markets have been open here for about an hour. There's not a new challenge trade on the board as it sits right now. There's one that's very close in Coca-Cola, and so we'll see kind of how that plays out here as the day progresses, but that could easily be a signal later on here today. Now, S&P futures jumped here last night, and you can see the timing of it all. It happened we saw the first jump happen as European equities opened, and then the secondary jump happened on some big volume a few hours later. This is on a preliminary Brexit deal coming into play here between the European Union and Britain. And, to say, well, it's worth, it's worth what, 15 points to the market, 0.5% to the market, I think speaks absolute volumes about how much it was priced in. If you remember a couple years ago, Brexit, news tossed around on Brexit, it was moving the market 3-4% on some certain times, right? Within a matter of days, Brexit news was driving the markets in a pretty volatile way. And now it's, okay, it's worth a few points, right? Keep this in mind when it comes to the trade war between U.S. and China, right? The longer it drags on, the fewer and fewer points it's worth to the market. And we see that happen with these issues all the time where, initially when the market's adjusting to it, it's a big deal. It's, there's a lot of worry, concern, there's more volatility. And then as time goes by, the volatility of it diminishes, the, urgency behind it, diminishes, the overall impact, lessens as, investors understand what it's all about, right? We go from, Brexit and what are the possible outcomes being unknown and speculative to, we know kind of how things are going to play out one way or the other. And great, it's not something too much something of too big of concern there. So I do think that's where we're going to see the trade war go. Not this year, but probably later into next year and even the year after, where, we get some news on it. And, yeah, it's worth a few points to the market, but that's probably about it. And I do think that's, path of least resistance here from that news cycle standpoint. We see the strong earners getting bought up here again today. J.P. Morgan, moving on up. Bank of America continuing its rally here. If we look at something like a Johnson & Johnson that reported a couple days ago, right? They moved on up yesterday, moving on up here today. We are seeing multi-day buying in some of the stronger earnings. If we go to some of the weaker earnings, it's not the same story. Goldman Sachs, we have not seen that kind of stack on buying come into play here for it. We look at Citigroup, we haven't seen it. It has definitely been one where we are seeing differentiation. We're not seeing investors go and say, oh, I can go buy the entire sector or everything. They're going out and saying, all right, I can go and be differential here and there based on some of the stronger earnings, and we do continue to see the stronger earnings get bought up, and then some of the stocks that are more heavily shorted ahead of earnings getting covered a little bit, right? Your Caterpillars of the world, getting covered a little bit. And then you got the home builders, which, just keep on trucking, just keep on moving on up, just blitzing in a pretty big way here. I want to talk this morning about two things. Talk about trading the odds here with the challenge, and then go take a look at the challenge watch list a little bit, here this morning with how things are set, with the challenge being in cash right here. Now, anytime I exit a position, so, yesterday, Microsoft, right? I inevitably hear from several asking about the position and what do you think? And they're holding it, or they sold it early, or they did something different, and why did I do what I did? Blah blah blah. Right? And I state why, and it's very clear, at least to me, when I exit why, and I try to convey that. I know sometimes I don't convey it as well as maybe I should, but when it comes to exits and time stops for the challenge, right? What happens after the time stop, could be anything. It's something where, yeah, the stock could go up. Yeah, the stock could go down. Yeah, it could gap down and go up. It could gap up and go down. It could rally into the close. It could fall into the close. It could do all sorts of things, right? I don't have control over it, right? No trader has control over what it does. But the reason the time stops are programmed like they are has everything to do with playing the odds and absolutely nothing to do with looking at the chart and saying, do I like this stock or don't I like this stock? Over 3 years of data gathering and trying to put this time stop, trying to tweak it in a way where it's maximized for the signal that's being generated, right? This time stop doesn't work or isn't really effective for just anything, right? It's not like I'm going to go out there and say, well, I like this stock, so I'm going to go buy it today and throw this time stop on. That doesn't make a whole lot of sense, right? The time stop is tweaked for a trend signal and to say, hey, you know what? The validity of this signal, it really weakens over time, and here are the time elements where we go, okay, you know what? These are where the reversals come in and where some of the biggest danger is. It doesn't call every reversal. It doesn't say, well, the stock has to do this or stock has to do that. But we can see over 3 years' worth of data, now more than 3 years' worth of data, that, hey, you know what? Once we get past certain time periods, the odds are simply not in our favor anymore. And when we look at Microsoft yesterday, when we look at Walmart yesterday, the bottom line is, yeah, they could still go up. And do I like them for going higher? I do. But the odds of that happening with the options that we have based on the signal that came in the week prior, well, those have diminished in a big way when we look at the bank of data. And so they're tweaked for the odds. And the decisions are made based on the odds, not what could happen, but based on the odds. And if we go to last challenge, right, and we come into the results for the last challenge, right, there were some of these trades where, we got time stopped out, and the stock, it did keep going up. But there were more last challenge that we got time stopped out of, and the stock went against us pretty strongly. And had we stayed in, it would have been pretty ugly. And that's the idea here behind the time stop. It's basically, hey, you know what? The odds have switched, so there's no reason to have that risk. Let's wait for the next one. There's always new signals, and let's go, right? And yes, I know, some people want signals all day, every day. Well, that's not what it is, right? And, what it is, we're getting a pretty decent bank of signals so far, during this challenge. We've only been able to trade 4 here due to, some of the sluggish start there with Home Depot and Intel. But there will be plenty of signals as we go forward, and we'll continue to trade them in this manner. And with this time stop, and to me this time stop, yes, the algorithm is very important in terms of, okay, you know what, having better potential to find trend. But it is the ATR method that, to me, is what really enhances the signal and makes the signal actually tradable. And it's something where, yes, there are situations where you can look at it and you go, well, no, I shouldn't be doing that right now. No, I should do this or I should do that. And that's fine. And, feel free to go and do what you'd like there. But as far as the challenge goes, you'll see me continue to, follow along with them and run with them. And, I know when I exited, the exact moment I exited Microsoft, I did the option wasn't red. It was green by 5 cents. But you know what? 5 minutes earlier, the option was red. It was in that position of Look, it's not going anywhere, right? It wasn't in that position of, hey, you know what, the option's going somewhere. It's improved. We're just shy of the 2 average true range move. So fine, let's give it another day, the 6th day. It was in that area of, look, it's clear, it's not going anywhere. Let's move on out, wait for the next one, and go. And so, you'll continue to see that consistency of exit, with the trades as we go forward. And, you won't see it be, well, what does Jeff think? Does Jeff think this or that or the other? And so maybe Jeff's going to hold it. That just isn't going to be the case. I will step in and do things that are not, via the algorithm in very unusual circumstances. But as we have talked about before, most of those will be to offload risk, not to onload risk. I'll let the algorithm put the risk on, and when I see maybe it's put on a little too much risk here or there, then I'll be the one to, kind of reins it in here just a little bit. All right. So anyway, trading the odds, that's what it's about, and that's what it'll continue to be about here. Now, let's take a look at the watch list. I'm anxious for the next trade. I know others are too. But let's go through, take a look at things. Alcoa reported earnings. This one gave a bullish signal earlier this week, and reported earnings here last night is up nicely after those earnings. Now, this is the type of stock where I could have gotten in yesterday. I decided not to because I'm not going to hold earnings until the challenge is up to 10,000 in value. Once the challenge is in 10,000 in value, more than happy to play these, right? More than happy to play these. The one thing with the challenge algorithm we've noticed is that when a stock triggers ahead of earnings, you know what? It really pays to own the options on those earnings. It doesn't mean that it's overwhelmingly has to go up or has to go down the way the signal says, but, the options tend to pay over time, with more winners than losers. So I won't hesitate to hold those. But once we get to that 10,000 area, American Airlines has earnings here coming out this week. So it'll be interesting to see kind of how that plays out. But nowhere close to a signal. Apple, nowhere close to a signal here. Apple's been on a nice, nice trajectory here overall. I know it was a little sluggish yesterday, but has had a pretty nice trajectory. Just one that haven't had a signal to be able to play here with it. Amazon, this is one that had a 3-7 crossover not too long ago, but wasn't a signal, or I don't believe it was a signal. Let me double check here. Yeah, it wasn't a signal, here with it, coming off of a new low. Sometimes, we could get a signal on that, but we didn't on this case. But it's one that is kind of building a nice little base, a little bit of higher low, could set, but we're not going to see it probably before its earnings. Arconic, same thing. And then we get into something like a Boeing, and Boeing just kind of in this consolidation. And we see a lot of these out there. And, which way they're going to break. They're going to break up and give a bullish signal, break down, give a bearish signal. A lot of things like a Boeing, chances are pretty good that by the time we get a signal here in the next few days or maybe a week, the company's going to be reporting earnings, and the options aren't going to make a lot of sense for us where we are with the challenge right now. So I'm not expecting a trade on something like a Boeing anytime soon. Same with an Alibaba. So there are a lot of those out there. The banks, Bank of America, JP Morgan, these are stocks that just simply aren't going to trigger anytime soon. Right, the 3-7 is crossed up, and they're moving on up to new highs. If they cross on down, they're probably not going to be bear signals simply because of the fact that they're coming off of new highs. So we need to see them have a cross down and a cross back up, which I do suspect will happen during the course of this challenge, but, won't happen anytime, real soon on it. Bristol, it's been a funny stock to watch here, and one we've seen a few signals come in, but haven't been very tradable. Caterpillar, we talked about yesterday, here, but nowhere close to any sort of signal. So, just not a lot of stuff on that first page where I go, wow, okay, you know what, this could set a signal here today, tomorrow, something like that. In fact, most of those, they're going to be a few weeks. Chipotle, this is one that could be any day. This has been mired in a consolidation, a pretty harsh consolidation here. I'd love personally to see it break down and then snap back up. We'll see how that plays out. Earnings are coming up here for it as well. ConocoPhillips, I thought this had a good chance of being a bear signal this morning. We saw the 3.7 yesterday try to cross down, but didn't cross down till almost the close. So it wasn't crossed down when I jumped on video yesterday. And, it has that downside action. Today kind of has that little pause. We'll kind of see how that plays out here today. But this could be one that signals bearish before the end of today. It is also one that if it reverses and starts to truck higher, we could see a bullish signal come in. So it's just in a very interesting position right here where we could see either signal start to get set. Which would be very interesting. CSX, which had earnings here this morning, and so, nothing, not a huge gap on it, but, decent earnings for them. In fact, if we come in and just take a quick look at the earnings here, you can see earnings per share, they beat expectation by about 7 cents, right? So small beat there, but no real beat on the revenue, right? No real beat on the revenue. They're in a revenue contraction period right now, and this is what the market's been worried about with CSX, and what we saw last earnings, that, hey, they're going to be going into this kind of revenue contraction period, and are they going to be emerging from that? Well, from the earnings, and I haven't gone through the call or anything like that yet, but from the raw numbers, I don't think we can say that, but, if we start to see some signs that they're going to emerge from revenue contraction, this is a stock that easily goes back to $80, $90, even $100. So CSX one, definitely worth watching. Chevron yesterday broke on down a little bit, snapping on back here today. This is still one I think, hey, you buy Chevron, you short energy, and that's one of the best energy trades out there. But yesterday, nice little downside, candle. But no gap down here today. And I mentioned yesterday that, hey, you know what? With some of these candles in energy, if we get a gap down today, it could be a nice little sell element, but didn't get that gap down. Delta Airlines, this, nowhere close to a bull signal coming off, as it's kind of got this new low here. But would love to see it kind of cross up a little bit, maybe give some sort of downside signal, but nowhere real close. Triple D, not on the challenge watch list anymore, my apologies. Disney here had an upside 3.7 crossover yesterday, but not a bullish signal. Nice little gap up here today. And one that, it looks kind of like this wave right here starting to form. So we'll see how it plays out, but probably not anywhere close to a signal anytime soon. So you kind of see the point with most of these, right? We have a Conoco that could go either way, but a Facebook, a Disney, they're nowhere close. They're just simply nowhere close. And FCX, nowhere close. We don't have many out there that are really close to setting a signal, but we do have some. Things like GLD, which have just not been setting signals for the last few months, have now consolidated to a point where we could see a signal come into it at any time. That goes for GOLD here as well. So very interested with those. Those are two that are very close. Halliburton is one we could see a signal come into play here sooner than later. Home Depot, probably not. Honeywell, after their earnings here this morning, probably not, any signal anytime soon. But if you're super bearish and you go and read that Honeywell report, you have to kind of go, ooh, okay. Maybe I have to, revisit that. IBM earnings, big drop here for the stock, 6% here on earnings. I've not had a chance to go through the earnings here just yet. I'll be doing that here today. But again, nowhere close to a signal. Intel could be a downside signal here sometime soon. We'll see how that plays out. But JD, nowhere close. J&J, nowhere close. And so, we have gold, GLD, Juniper. We could see a signal come in. I suspect it would be more likely to be a bearish signal. come in on the next downside 3-7 crossover, so that's getting close. JP Morgan nowhere close. And then Coca-Cola, which I mentioned earlier. This is one that could trigger as early as today, here this afternoon. Has a nice upside 3-7 cross. The stock has finally had some consolidation, a little bit of pullback associated here with it. So very interested to see how that plays out. We do have Coca-Cola earnings coming on up here soon, so do have to take that into account here with it. But we could see a signal. Vegas Sands, in that nowhere close. MGM, this is one. If this is one that looks like a lot of energy stocks, doesn't have the downside 3-7 crossover, but it could. Triple M. This is a stock that if you look at the Honeywell report, let's go. Okay, could we see something better than expected from Triple M? Triple M's been in this kind of period like CSX of really eroding earnings and underperforming its peers. Do they start to see some signs of life, some signs of turnaround? We do see some signs of bottoming within the chart, but we would have to see a pullback and a fresh 3-7 crossover to see a play to the upside. A downside 3-7 crossover could easily give us a play to the downside there on that. Altria, nowhere close to anything. And then Microsoft, which is a very interesting one. This has been in this long-term consolidation. The signals that continue to come in are that consolidation risk going forward is very small. And so that's why we see the 3-7 crossover setting signals. And, let's face it, we got the last signal, and yes, the stock went higher, but not enough or quickly enough or fast enough or to a good enough magnitude to really change the option value in a material way. And, it's still kind of, stuck in that. Would love to kind of see it finally break, because when it does, it's going to move big. And, I fully expect to be on board with it for the challenge. Micron, this is one that, if you're bearish out there and you're looking at this market and going, okay, where's some of the better setups? Keep an eye on Micron. This is one whose earnings were, not all that great. It's one where we've seen, what I call a little bit of a premature snapback, and one that has gone and now pulled back up to the earnings gap, finding a little resistance there. We get another downside 3-7 crossover. It would be a lower high. It would also be kind of this head and shoulders topping pattern. If we get that next downside 3-7 crossover. So Micron, one on that list that could easily set a signal. Netflix had earnings here after the bell yesterday, but nowhere close to setting a signal anytime soon. So in that category. So you can see that as we go through a page of 10, we have about one and sometimes two that are have a chance of signaling sometime soon. The rest, no. Nike, kind of no. Pepsi, this one's in a similar position to Coke. It's finally had a little bit of pullback. Doesn't quite have the 3-7 crossover here on it today, but should that come in, we could easily see a signal come in here for it. Procter & Gamble finally getting a pullback, here on it, but nowhere close to a signal. Raytheon, which, isn't on the watch list. It is in the test basket, but with that merger with UTX, have, kind of push that one aside here a little bit. AT&T, still going through that consolidation mode here. This is a great stock to sit on, wait for a dividend, but other than that, not many trading signals with it. Target, nowhere close. Twilio, we talked about this one yesterday. Had the downside 3-7 cross, did not set a bearish signal here. This is one that I'd love to play to the upside. Not sure I'll get that chance anytime soon, but, it's finally coming into a fundamental area that makes a little bit more sense. Now, it's not cheap. It definitely isn't cheap, but, it does make a little bit more sense, with where it sits. Twitter, had an upside crossover earlier this week, didn't trigger, now just kind of sitting there flat, but could be a signal, going on forward. Under Armour, I'd love to play some Under Armour again to the upside, but we didn't get a signal here this month, and so we do need to wait for the next crossover to come into play here on that. And then UPS, Visa, neither anywhere close. Valero, nowhere close. We talked about Valero back here with the consolidation and the breakout, and it's had that, but we didn't get a trade signal that we could go after here. With Valero when it did happen. Vulcan Materials, probably not anywhere close. Consolidation risk on is very high. Same with Verizon. And then Walgreens, which triggered earlier last week and has just continued to, rally to the upside there. With it. So anyway, that's where things sit. And, so again, it's not that, there's nothing potential on the board. There are some potentials on the board. But for the most part, a lot of stocks, don't have that potential. We're sitting in an area that's very typical where, about 5 to 6 to 7 stocks on the watch list at any given time have a chance to trigger. Right, and that's typical, and it's one of the reasons why we make the watch list what it is, so that we do have that. We don't want too many signals coming in, we don't want too few signals coming in, so we try to kind of pick that nicer number. This challenge, it did pick more stocks for the watch list to increase the number of signals, just because of market conditions. And so we'll see how that plays on out here. But, keep an eye on gold, GOLD, and, we start to see some crossover action there. I strongly suspect we'll see some trigger action that follows. Thanks for hopping on. Have yourselves a fantastic day, and we will talk to you later. Take care.